Hey, just a quick update today. I'm going to touch on a few topics here. Lots going on, but topic number one is the Fed and interest rates along with inflation. So the Fed did hold true to their word and they raised rates by only 0.25% in their most recent hike. They are raising rates in order to slow the economy down, which would then in turn slow inflation down. The risk, of course, is that if they raise rates too much and the economy can't handle it, we could then spiral into a recession. So it is a balancing act, and we'll see if it's possible to pull that off. Now, on one hand, certain components of inflation have not reversed course at all yet, or some are even trending upwards, in particular, shelter, housing, rent. On the other hand, the jobs report that came out last week might be showing us that the economy is more resilient than most had anticipated, as we added over 500,000 new jobs in January, while the unemployment rate ticked down to 3.4%. Earnings numbers looking okay to this point relative to estimates as well. So this might be a resilient economy. It doesn't feel like we're in a recession yet, but the question is, does that then embolden the Fed to take an even more hawkish stance? I guess we'll find out. Number two, about a recession. So this word keeps coming up. Don't forget the word recession refers to the economy. The stock market is a totally different thing. The market tends to trade based on what's coming, not what's happening now. So if everyone's talking about a recession coming, the market's going to perform poorly, and that would obviously explain 2022. So if we fast forward, we find ourselves in a mild recession, and there's a recovery potentially on the horizon, the market could very well bounce back despite dropping earnings, rising unemployment rates, things like that. The market does tend to perform at its best when it's recovering from the bottom. And that usually starts before the recession ends. So number three, okay, the debt ceiling. Hot topic. I don't really think it should be in context with investing. We're not too worried about it. They're going to figure it out because, well, they have to figure it out. When it comes to these government issues like raising the debt ceiling, government shutdowns, they always tend to get through it. The idea that this would impact the value of a stock or the stock market in general isn't really all that logical. Remember, we're invested in companies, not the government, and that's something that we should all be thankful for, I think. But thanks for watching as always. Let us know if you have any questions or if you'd like to talk. Thanks.